Starbucks missing analyst profit and revenue estimates for its fiscal first quarter. Comp store sales were lower across the board, and the company lowered its global same-store sales outlook. However, Starbucks did reiterate its full-year earnings per share growth guidance, and it said it's very confident in its China business in the long term. Shares actually higher in the pre-market despite the slightly lower than anticipated comp growth numbers. Shares up about 5% right now. Joining us now, Rachel Ruggeri, Starbucks CFO. And Rachel, appreciate you giving us some time this morning. So talk about your outlook, because even as you say you're confident, the company's confident that comp store trends will turn more positive this year, it's also more loaded toward coming quarters. In other words, the current quarter maybe not as fast to start. What gives you the confidence that things will move in that direction?
Sure. Well, thank you for having me, and good morning, everyone. You know, when I look at our business and we look at our outlook, it's really based on the strength that we saw in our first quarter. So our first quarter was incredibly strong globally, and that was driven by the strength that we saw across our most loyal customers around the globe. And specifically to our U.S. business drove revenue of 9%, and that was driven by record growth amongst our most loyal members who came more frequently and they spent more money. And that was driven a lot by our holiday, which was successful. We continue to see growth in cold, and that drove the highest ticket we've seen in our over 50-year history. So all of that gives us a lot of confidence. We see some near-term and I'd say transitory headwinds, which is reflective in our guidance. But importantly, we're seeing that our triple shot strategy is unlocking efficiencies, and so it's allowing us to have the confidence in reaffirming our 15 to 20% earnings growth, where we'll see growth coming from both revenue as well as the efficiencies we're unlocking through our triple shot strategy. So that's what gives us the confidence on our full guidance for the year.
You mentioned that you saw good results among your most loyal customers, maybe a little more softness on more casual visitors to shops. Is that a read-through to general consumer trends? What's your interpretation of that?
You know, we look at it as broadly, our brand remains strong across the globe. And in the quarter, we had our most loyal customers remain loyal. We did see some softness in terms of our more occasional customers, but we have robust plans in place, and we feel confident we'll be able to navigate this dynamic environment. So when you look at all of that, the performance we have, as well as the opportunities around our ability to continue to innovate, new product offerings, which we spoke about yesterday. We have a lot of good innovation in the pipeline that resonates with our customers, as evidenced in Q1, where we saw a record high ticket in the U.S. So our innovation drives a lot of our success, as well as our ability to continue to increase our digital capability, bringing more customers into our rewards program, and then continuing to open stores and provide channels of convenience. All of that helps to serve our overall business and gives us a lot of confidence that despite there are some near-term headwinds, we see an ability to be able to continue to deliver well over the long term.
Rachel, we've seen some companies coming out with lackluster results in China and others coming out and overperforming. When you look at China, how are you able to hold on to that premium choice that Starbucks reports to be in China for takeaway coffee?
Well, it really comes from in the market over 25. We've been in the market for over 25 years, and we've built a very durable business. We have a strong brand. We continue to be the number one choice for our customers from away from home coffee. And what that does is that gives us a leading advantage in the premium market where we're choosing to play. And we have distinct and competitive advantages. We have 7,000 stores that are highly profitable, and they're in prime locations. And we have innovation, coffee-forward innovation that's resonating with customers. It's driving trial, it's driving consumption, and we're seeing it resonate with even a younger customer. And we're amplifying our innovation as well as our messages on social media. And so that's driving strength in our business. And we continue to believe that where we lead today is through the experience that our partners create for our customers. That's our differentiator, and it has worked well for us over the 25 years, and we continue to believe that we are best positioned to be able to lead in that space.
You mentioned strength in the latest quarter on average ticket size embedded in your comp sales. How much of that is pricing? How much of that is the mix? And can it continue at this point if you are, in general, companies seeing a little bit more hesitance among consumers in terms of paying up?
Yeah, the record ticket this quarter was driven by a combination of annualization of pricing moves that were taken last year, as well as a little bit of new pricing, but also driven in it is increased beverage and food attach. So that speaks to the strength we've been able to drive through our holiday promotion, through our offerings. It resonates with customers. Cold, as an example, was 59% of our sales this quarter. Typically in Q1, cold is closer to 55%. And we specifically innovated in cold around our iced chai tea latte, pumpkin, gingerbread chai tea lattes. We continue to do incredibly well with our customers on our iced shaken espresso, so very coffee forward, but in an iced format. So as we innovate in those new areas and offerings, we believe we'll continue to drive ticket through attach, as well as food. Food in the quarter actually had record revenue in bakery and breakfast. And so we see a lot of opportunity with all-day breakfast, with all-day snacking, and leveraging our digital program to be able to incent our customers to come more frequently, but also to attach in certain day parts. And so there's a lot of opportunity ahead as we think about how to continue to drive our overall ticket.
And in terms of overall store growth, I mean, am I right that anticipated about 2,000 net new stores this year from 38,500 or thereabouts right now? Where is Starbucks in its ultimate trip to its destiny in terms of the overall footprint?
Yeah, so what we've cited as our goal is to hit 55,000 stores, and we're well on track for that. Despite everything in the quarter, we had a strong quarter, but certainly there were some headwinds, and specifically in our international market. But despite that, we opened 10% of our net new store growth came in our international market. Our international market has 20,600 stores. When you exclude China, which has about 7,000 stores, we're looking at nearly 14,000 stores that are outside of U.S. and China, and we're continuing to grow. And then broadly, we still have a lot of opportunity in the U.S. And so when we look at our U.S. business coupled with our opportunities globally, we feel very confident about our opportunity to continue to open new stores, which really drives new occasions, but it also brings in new customers.